Today we are here to explain the journal entry with the framework of design thinking.
Journal entry. Journal entry is the record of financial transaction in an accounting system. It is way to document and classify the financial events and transactions such as income, expense, asset, liability, and equity. Journal entry typically includes journal entry or the critical components of accounting cycle, as they provide a detailed and accurate record of financial transaction, enable the business to make informed decision and ensure the compliance with accounting standard and regulatory requirements.
In design thinking, the first one is empathy. I recognize how time consuming it must be manually enter each journal entry, worrying about errors or omission that impact financial statement. I can see how overwhelming it must be feel to keep track of various accounting standards and regulatory requirements for journal entries. I appreciate how important it is to have a systematic and organized approach to journal entries, ensuring transparency and accountability in financial reporting. I understood how journal entries can be a critical part of financial analysis and decision making, and how important it is have confidence in their accuracy and their completeness.
Second one is define a way to document and classify financial events and transactions. A entry that includes date, description, amount, accounting codes, reference numbers used to record and track financial transactions. Update account balance, prepare financial statement, recently accounts and analyze financial performance. In accounting, a journal entry is a critical component of the accounting cycle, as it allows business to accurately record and report financial transactions, making informed decisions and ensuring compliance with accounting standards and regulatory requirements.
Journal ledger. Journal is a book of records where daily monetary transaction of a business is posted. Though it brings all the transaction together, it creates confusion between small and important expenses. Thus, a ledger was introduced where all the transactions are recorded under the individual accounts. In ledger, there are four types. The first one is bought ledger. The bought ledger is nothing but it is purchase. The second one is sales ledger, and the third one is general ledger, and the last is private ledger. Sales ledger. Sales ledger is personal accounts of credit customers are recorded. In purchase ledger, the personal accounts of credit suppliers are recorded. The third one is general ledger. Real account, nominal accounts are recorded here. The general ledger has been categorized into 5 categories. The first is asset. In asset, it includes cash and accounts receivables. The liabilities includes accounts payable and purchase and debt. Stockholders' equity includes common stock and retained earnings, revenue or income. It has sales and service revenues. Expenses. Expenses includes utilities expenses and advertising expenses. Utilities expenses or the cost happen to the product has been made. The advertising expenses, it is related to the promoting expenses or ad through TV shows, events in the malls, etc. Ledger accounts clearly show that what transaction we have made. Now we can see objectives of ledger: classification and recording of business transactions, basics of trial balance, basics of profit and loss account, basic of balance sheet, detailed financial information.
Ideate automation, implement AI-powered automated journal entry system to reduce manual error and increase efficiency. Prototype. This prototype demonstrates the basic journal entry structure includes data and the description of transaction, amount and accounting codes, debit and credit, reference number and attachment note or additional information. Status.
Fifth one is test. Successful save. Save the journal entry and verify that it is saved successfully. Error handling. Attempt to save the journal entry with an error. Attachment test. Attach a file to the journal entry and verify that it is attached successfully. Posting test. Post the journal entry and verify that it is updated in the ledger account. Fifth one, delete test. Delete the journal entry and verify that it is deleted successfully.